Welcome to the Art of Procurement podcast. My name is Philip Ideson, a 20-year procurement practitioner, former head of procurement and advisor to procurement leaders around the world. I started Art of Procurement to help leaders and their teams access the resources they need to increase their impact through insight-driven procurement. You are listening to our flagship podcast where we pull back the curtain and shine a light on the strategies, tactics and tools that leading procurement teams are using to align their impact with the needs of their business. In today's podcast, I'm joined by friends of the show, Joe Payne, SVP of Source to Pay, and Jennifer Ulrich, Senior Director of Advisory at Corcentric. Both Joe and Jen are returning guests, having only recently joined me in the summer to discuss their newly released book. This time, I'm going to share with you a recording from a recent AOP Live webinar that was sponsored by Corcentric. It was titled Bridging the Gap Between Procurement, AP and Treasury through Procurement Transformation. And in it, we discussed topics like where procurement, treasury and accounts payable tend to fall out of sync and why that happens, how fragmented processes not only negatively impact suppliers, but also reduce the ROI to the company from those relationships, and the additional benefits, such as a reduced overall effort and improved data quality, that result when all three groups work collaboratively. Okay, then let's play the tape, and we'll join the webinar at the point where I asked Joe if he found procurement or if procurement found him.
Yeah, well, procurement really found me, and I think that's a pretty common theme. So I don't know how many times someone answers differently on your show.
Not many.
But yeah, back in college, my degree was operations and information management, and at the time, there wasn't really a supply chain degree, and I think that was the closest to it, at least where I was familiar with. So there was procurement, topics covered throughout that. And then I went into consulting. I went first to Accenture and really fell away from everything operations and supply chain related just based on the role. And then as I moved forward in my career, I came across a small niche consulting firm called Source One Management. And Source One was 100% focused on procurement. It was something I was interested in and wanted to learn about, but it really came to me versus me going out and finding it.
And Jen, I want to pose the same question to you. How did you find yourself in procurement?
Yeah, so definitely have to say that procurement found me as well. So prior to working in consulting, where I am now, I actually worked at a pharmaceutical company it was a pseudo procurement role in asset management, doing a lot of inventory management in terms of the computers and assets for the company there. And so definitely being more on the transactional side of procurement, looking at how to buy and processing POs and all of that, and then flipping over into the consulting role was a very different experience. And definitely found myself is one of those things that when I often say when you're a kid, like you don't exactly say, hey, when I grow up, I want to be in procurement. But very, very fortunate that I found myself in this role. It's certainly challenging and a lot of fun. We get to do a lot of really cool things day to day, helping procurement organizations really elevate how they do business and improve the way they work with their stakeholders and suppliers. So very exciting.
Now, a lot of viewers may not be aware that you both also published authors in the procurement space. Recently published the second edition of Managing Indirect Spend, Enhancing Profitability Through Strategic Sourcing. If the title doesn't give it away enough, Jen, can you give me kind of the quick 60 seconds of what it is that you're kind of conveying and the messages that you're conveying through that book?
Sure. So basically, the premise is to help procurement organizations, sort of a do-it-yourself manual, if you will, on how to navigate through some of the common challenges of strategic sourcing and, helping understand all of the people, processes, and tools and technology as it relates to sourcing. And, in the newer edition, we actually have added a whole section on how to design a procurement function from the ground up and considerations to make. But the book includes a lot of real life examples. I think it's, it's very easy to follow and be able to apply it to your day to day.
So yeah, as a plug, I would encourage anybody to go and check that out. I've read the book. We read it because we did a podcast recently. So it's Managing Indirect Spend, Enhancing Profitability Through Strategic Sourcing. Now, Joe, in today's conversation, we're going to hear the term source to cash quite a few times, I think. And that may be a term that is new to some of the folks who are watching today and listening today. I just wonder if you could, just so we can kind of get set on terminology, what do you mean by source to cash, and how does that differ from source to contract or source to pay, for example?
Yeah. Well, source to pay is obviously much more focused on the buy side of the equation, right? When you talk about a B2B transaction, you have a buyer and then you have a supplier. So source to pay means everything from running a sourcing event through paying for the good or service that you went out to market for. On the flip side of that transaction, there's a supplier. And from their perspective, they're looking at that same transaction as order to cash. So think about from the customer placing the order to getting paid for the good or service that they provided. And when you really think about a B2B transaction as in a holistic way, what we're talking about is going from source to cash. Mm-hmm. So that ties into AP because, again, there's two sides to every transaction. There's a buy side and there's a supply side. And we want to think in those terms because as we think about bridging the gap between AP, Treasury, and procurement, those types of things are important from a cash flow perspective, from a financial statement perspective. And so, yeah, we're going to talk about that a little bit more as we go through, but that's the idea behind it.
Mm-hmm. And you talk there about the importance of actually making the gaps that exist between AP and Treasury and procurement a focus of transformation, as opposed to looking at those organizations as siloed. Is that kind of what you see?
Yeah. So, when you think about the gaps, like that example of that end-to-end transaction, let's talk about the first part of it, source to pay. What does that really mean? Well, you're sourcing a requirement, you're contracting for that requirement, then you're placing a requisition. That requisition goes into a purchase order. That purchase order ends up going to the supplier. They provide the good. There's a receipt that comes in, and then there's an invoice, and then you have to pay that invoice. That's the source to pay process. And as you walk through that process, the ownership of the supplier relationship can often change as you go through that process, or there's multiple endpoints into that supplier relationship. So that the traditional procurement side of supplier management, it's cost management, it's SLAs, it's contract terms, it's supply terms. But then there's input that comes in that's generally going to be driven by a treasury policy around payment terms. And then there's also, as that invoice comes in, what do you actually do with that invoice? Who's managing that process? How are you managing disputes? How are you managing issues and reconciling? And so that's where AP comes in. And so there's multiple points of failure within that process if gaps aren't addressed and if everyone's not talking the same language.
Right.
And so when you think about how that can tie to a procurement transformation when finance is leading it, or when there's good coordination between those three groups, treasury, payables, and procurement, first of all, you're going to start speaking the same language. Right? There's always been that disconnect between procurement and finance around language, right? Because what procurement calls cost savings, in a lot of ways, is not aligned to what a finance department would call cost savings. What procurement defines as cost savings is really procurement impact.
Right.
So, even if you hard dollar cost savings, you reduce the price of a product from $10 to $9, you have $1 of savings there. If the business buys more of it or buys something else, the budgetary impact is not there. And if the budgetary impact is not there, then the financial statement impact isn't going to be seen either. So bringing these groups together as part of a transformation effort will get everybody talking about the same language, having the right definitions. But then there's another piece to it as well, which is adding to the dialogue and to the language that procurement speaks. So things that I rarely hear procurement talk about: cash flow. weighted average cost of capital.
Mm-hmm.
When you're talking to finance and when you're working closely with finance, those things are really important, and they can have huge impacts to a balance sheet or an income statement. They can have a huge impact into how you're viewed in the marketplace as a company. And so to start thinking about those types of metrics is really where you can see a huge amount of improvement. And again, I always talk about procurement has the ability to impact the bottom line more than anything else, any other function in the company. But where we're seeing that go, as an illustrative example, is, traditional way of getting started in a procurement transformation is a spend analysis, right? You analyze your spend, you see where are the opportunities, how do you want to create a category management strategy based on where your spend is, what the savings can be. That dictates your investment, how much resource you want to bring in, how you want to define a technology solution, all those things. What we're starting to do more of now is, marry up that spend analysis with a payment terms analysis. Mm-hmm. It's a very simple example, right? So procurement traditionally would say payment terms, that's something Treasury defines, right? And we integrate that in the process. But the reality is the way we define payment terms and structure them could be very different, and there's a strategic way to improve those. We get payment term files now today, and there's always this 80-20 rule tied to those, where even in today's environment, so much of the spend, the corporate spend that we see, is pay upon receipt, mm-hmm. which is not an ideal situation. Right. It's actually the opposite of what you would expect to see, because you hear about so many companies going to 90-day terms. But we see a big bulk of it is pay upon receipt. And there's two reasons for that. One is because the policies and procedures haven't been defined properly or adhered to properly. And the second is because there's huge inefficiencies in the procure to pay process, specifically when an invoice is received, how long it actually takes to process and pay that invoice. And we have customers that have 30-day payment terms, but in their system, they put in pay upon receipt just so they can make that 30-day or 45-day window because of how long it takes to approve an invoice. And so there's huge inefficiencies that a better process would help fix. And the other side of that, I would just say one other thing about it is, we talked about order to cash before. We can look at payment terms and payment term improvement the same way we look at cost savings as a procurement function. So our days paid outstanding, DPO, as a company is a supplier's DSO, days sales outstanding, right? Those are two very common terms that we don't hear procurement talk about a lot. But if you're negotiating, let's say with a FedEx or a UPS, I actually just looked up their days sales outstanding today to give this example. We say you're negotiating your small parcel, and you're being told we have to pay that upon receipt, or UPS is pushing pay upon receipt or pay in 15 days. There's data out there that would tell you, well, UPS's standard DSO averages 45 days, or I wrote it down at the start, 38 days. FedEx is 48 days. But now there's a negotiation tactic, and you can actually, instead of having a carte blanche policy around either a 0-day term or everyone's doing 90 days, you can really focus in and say, well, your average FedEx is 48 days. We want a 48-day payment term.
Right.
We don't want to subsidize you with a 30-day, and we're not asking you to go beyond that with a 60-day. And to work that into your negotiation strategy.
So for organizations who are thinking holistically across that source to cash continuum, there's obviously lots of benefits. I hear, for example, that we're just looking at the impact of a buying decision across multiple different facets versus just looking at it in the silo of a sourcing project, and how we may look at cost savings or benefits from a procurement point of view, and not necessarily a bigger picture perspective. Now, I want to come over to you, Jen, and you're involved in a lot of transformations. And so when you come into these procurement transformations, you're kind of figuring out where the lie of the land is. You're doing your baselining of an organization and all their relationships. Like, what do you typically see the relationship between procurement, treasury, and AP when you're beginning a change journey for a client?
Sure. I think oftentimes we see a real big disconnect among the groups. While it seems like there's a natural connection for them to work together, they ultimately have very different priorities and different work streams, as Joe was kind of alluding to just now in terms of what they're looking at and how they're looking at the business. Even though, when you really want to optimize the full P2P cycle or source to cash cycle, whatever it is, they kind of see as their different buckets of areas that they have to focus on instead of looking at it holistically. Whereas, Treasury comes in to set the terms and manage that risk across the cash cycle. And procurement's coming in to negotiate the terms and manage the relationships, and then AP needs to come in and pay. Where do we actually see them come together as a group? It's just not often enough, I think. And when we do see them come together, Treasury is going to be able to come to the table. We talk about how procurement wants to see at the table, but we forget about everybody else who needs to be at the table, right? So Joe was talking about policies and processes, right? And we'll see more often procurement sitting down with finance and talking about these things, but they're still leaving Treasury off the table, where Treasury should be coming in and helping to cultivate the right policies and procedures. Instead of being someone later in the game to review things and approve it, they should be there developing it together. It's just hard to imagine being able to really optimize the full cycle and get the efficiencies that you need without bringing these three groups together to work together to manage risk and compliance across the entire supplier lifecycle.
And do you find that's the fact as well, even in procurement transformations that are either driven by finance, or where procurement and finance already has that kind of the burning platform is created between the two of them and they're already in alignment, that Treasury is still kind of perhaps on the outside, or does it differ based on situations?
I think it does differ, but not as much as you would think when procurement sort of reports formally into a CPO, or if that CPO actually reports into a CFO. You still see that they are kind of marching to the beat of their own drum, if you will. So you still see a lot of disconnects where I'd say mainly in the technology space, actually. So, finance has been focused a lot more in recognizing the need to automate AP and, really focus on dynamic discounting and things like that. So they're off, automating their processes, and you still find, I see this a lot of times within our customer life cycles on the technology side, that procurement is still buying their own technology and doing their own thing. And ultimately there's going to be that competing decision maker when someone sits down and looks at the full technology landscape and says, well, why does procurement have their tools and finance has their tools? And did anybody tell Treasury what's going on? Right. Does everybody have the right data? Because that's really where you see a lot of the inefficiencies in the process, is because the tools don't connect properly. We have different systems of record. So I think, and again, even when the organizations report into the same function, it's a little bit more aligned, but there's still a lot of inefficiencies in decision making and bringing those people to the table to define those requirements for the technology, so you get that right set of data up front, and that you're not worrying about later of trying to reconnect and bring all of that together, both from a process and technology side, I would say. Because at the end of the day, the different functions have different ways of measuring success, where, finance AP is going to be focused on, their invoice approval time and processing costs, and procurement's more focused on cycle time and cost savings and suppliers, and then Treasury, again, ultimately on the full cash visibility to the organization.
It's interesting when I think of Treasury, even from a sourcing perspective, it's one of those organizations that as procurement we don't engage with very often.
Yes.
You're doing a spend analysis and you look at your spend analysis and you see all these things and you think, well, Treasury, that's kind of passed through, or it's, some banking fees or transaction fees that are related to financing or something, and we kind of stay away even rather than asking the question. Maybe we get involved with them when we're doing a P card or a corporate travel card or something, but historically there's not really been that connection between Treasury and procurement.
No, and I'd say that it's it's definitely a big miss that, we talk about sort of rewriting the story of procurement and evolving over time, but I think we're missing a big character in that story when you're not thinking about Treasury and using them as an ally, even in your negotiations, not just in the governance, but actually at the seat of the table with the suppliers.
And Joe, I want to come and ask, like, we talked about these gaps that exist. How does that impact the supplier perspective? We looked at this from a kind of an internal procurement point of view, but how does it impact on the supply base?
It has a huge impact on the supply base. And, I think we were talking about this webinar, a topic of it is how do you be a customer of choice?
Mm-hmm.
Well, that's procurement's job with the supplier community, is to make it easy to do business and to make those suppliers want to do business with you. That's a more new school approach to procurement, but that's really where we're headed. And why are we headed that way? Well, you're not going to be as likely to give the guy that doesn't pay you on time, or that makes it impossible to know if you're going to pay an invoice and when, or what the status of an order is, or what have you. You're not going to give them a great deal the next time you renegotiate a contract. You're not going to be forthcoming with them around market intelligence or new technologies or services that you have to offer that could be a competitive advantage. You're going to go to somebody else, your competitor.
Yeah.
So you want to be that customer of choice. But here's what happens when there's a disconnect. I mean, the first one I just mentioned, suppliers are not getting paid on time. They're not getting paid at the agreed upon terms. We set 30-day terms, we set 45-day terms. They're looking at it and they're seeing 60-day average, 75-day average, and each time that supplier has to reach out, that's an inefficiency for them. Say, hey, where's my payment? Did you get this invoice? Do you need me to resend it? Those are the things they want to avoid when we talk about their side, the order to cash side, right? And the other big gap is suppliers getting hit up for payment terms extensions by a group outside of procurement. We see that a lot too, where it comes from finance or CFO or someone in accounts payable. We're changing your payment terms to 90 days, And to me, I think that if I put myself in the supplier's shoes on that, it could be seen as a dirty tactic. I'm getting hit, from two sides. One from procurement hitting me on price, one from Treasury hitting me on payment terms, and it feels like a disingenuous negotiation to some extent because of that.
Yeah, I've just given up some cost savings here. Sorry, Joe, I've given up some cost savings here, and now I'm being asked for another concession over here, and I don't necessarily have a choice about it.
That has real impact on my business, right? We saw a ton of that through COVID, 90-day, 120-day terms, because there were serious cash flow issues. But all you're doing when you extend those terms out that long is putting that burden on your suppliers. They have cash flow issues too, right? And so, a lot of times, to be fair, that it's not intentionally done that way, right? There's not a strategy that says, hey, treasurer, you go here, I'm going to go here. There's no playbook to that. It's just the way it tends to happen. But it gives a company a black eye with the supplier community when you do that. And so that's exactly the impact you're going to see is the suppliers raising their price, when they get hit with the payment terms extensions. And so now you've got that internal struggle where you could have turned into a really advantageous situation. Now what you have is an internal struggle between two groups, one who's trying to manage cost and the other who's trying to manage cash flow. And then you see that on the supplier side, and they're like, do I really want to do business with a company who is going to treat their suppliers like this? The one other thing I would mention, which it ties into the whole conversation of a procurement transformation and how suppliers might perceive their customers, and it's kind of a pet peeve of mine, is when there is a lengthy supplier setup or qualification and onboarding process after an RFP was already run. Mm-hmm. So we see it in a lot of different industries where once a supplier is awarded the business, the hurdles that they have to go through to get set up, to do invoicing, to get payment with a customer, are areas of concern and areas where you want to create better efficiencies and a better, more streamlined process. Because I look at it the same way you're welcoming a new employee into your company. Think about it in those terms. You want to welcome a new supplier. You want to show them that, yeah, we came to an agreement here and now we're going to do business and this is how it's going to work. You want that process to be pretty seamless and easy from day one.
Yeah, it could be that you've had a tough negotiation. Maybe the supplier has given some concessions. You award the business, and then you get hit by the deluge of things that you got to fill in, and systems you got to register for, and hoops you got to jump through, and then you ask the same question 5 times.
Exactly.
It's something that we, from our business perspective, face as well. It's just when you're starting, you suddenly got a mountain of paperwork to deal with.
Yeah, and part of that too is companies not looking at their suppliers in the light of, a large corporate entity might be set up to handle that from a supplier perspective. Small, medium-sized businesses certainly aren't, right? And cash flow is critical to small, medium-sized businesses. I'm in your shoes. At some points I've turned away business because after we were awarded, the setup process was just too arduous.
Yeah.
And it makes you not want to do business with a customer because of that. So this is the supplier side of it, right? And if you're thinking about, I think as procurement or treasury or AP people, we need to think about it in those terms because you want to be a customer of choice because it helps you in so many ways down the road, from a pricing perspective, from a cash flow perspective, from a capacity constraints perspective. If you're a safety supplies manufacturer or a distributor, and you've got 20 customers that all need your masks because of the COVID situation, you're going to pick the ones who treat you the best and give that capacity to them first.
So I want to talk a little bit about how we then bridge those gaps. How can we create that the relationships that ultimately drive the vision that you talked about right up front of what can happen when Procurement, Treasury, and AP are together in lockstep.
Yeah.
Obviously, the conversation today, the context is around procurement. So from your perspective, why is Procurement Transformation the ideal place to address some of these gaps that we've talked about?
Yeah, well, one of the biggest, I'd say, qualitative objectives I see when we start procurement transformations with our customers is to change the perception and ultimately the role of procurement within the business. And a key tenet of that is business partnering, which is often overlooked, right? You don't really think about, depending on what your goals are for a procurement transformation, business partnering doesn't always factor into it. But if you don't have business partnering as a key tenet of a transformation, you're going to create more disconnects and more pain points between procurement and the business. So the way I look at it is we're better to start partnering than in a process that's already embedded and defined in most companies, and that's that source to pay process, right?
Yeah.
Because within source to pay, there are procurement focused roles, there are treasury roles, and there are accounts payable roles. And so to me, that's a great starting point is, okay, within this process, there are 3 roles that have a part to play in it. How do we fix that first? And, I would also say, as we just talked about on the supplier side, it's also an area with a lot of low-hanging fruit, right? Because there's a disconnect with multiple groups managing some aspect of the supplier relationship and the inefficiencies that can be created because of that. Mm-hmm. So it's a quick win in that regard, that if you can fix that and if you can work through those gaps early on in a procurement transformation, you're going to see some immediate benefit from it.
So I know that I've seen some questions in. I want to thank folks for sending those in. We're going to just circle back in those in a minute. Of course, if you have other questions, please feel free to pop them in the question box. But I want to follow up on something you kind of said there as we look at procurement transformation as being the good driver of addressing these gaps. Is, as we're positioning that, how can we make sure that it's not procurement's coming in to try and fix Treasury and fix AP, but that we're coming in as on an equal footing, to ultimately help the business, and not just say, hey, we struggled with you, let's come and we're going to tell you how to do your job.
Yeah, in my experience, no one likes to be fixed, But at the same time, the first step to recovery is admitting that you have a problem. So the way I look at it is this: is if you're going to start that dialogue as part of a procurement transformation of working through those gaps, the reality is, if you're from procurement, you're going to have pain points in your experience with AP and with Treasury. But if you're in AP or Treasury, it's going to be the exact opposite. You're going to have pain points and see bottlenecks in the procurement process. So I always recommend that, let's start with a collaborative mapping exercise. Let's just map out the source to pay process. Let's build a RACI of who does what within that. And let's identify our bottlenecks and our timelines. How long does each step of this take? What is the goal or the objective of what we're doing within that? And if you look at it in that way and be collaborative with an open mindset, that in that dialogue, there's not just things that AP and Treasury need to fix, but there's also things that procurement needs to fix or improve upon. Let's talk about it as improvements. Then you're going to get a lot more. You're going to get a lot further, and you're going to have a lot more of a, I would say, beneficial dialogue.
Mm-hmm. Now, Jen, when you see some of these, the procurement transformations take hold, and you start to see, improvements, how do you see procurement in terms of positioning themselves with AP and Treasury? Is procurement looking at AP and Treasury as on an equal footing with procurement, or are they looking at AP and Treasury as being stakeholders into procurement? Because the way that kind of, it changes the mindset, I think, of how you build a partnership with those functions and with those areas.
I think the way it is happening is more often seeing them as stakeholders. That when procurement is running a procurement transformation, it's almost like they only see themselves at the top and everybody else is just a connection point into it. But the way it should be is more of that partnership. And I'm a big fan of steering committee. So the steering committee concept, and not just within the transformation, but in an ongoing way that establishes that relationship. And how often do we see, we have to set up our savings strategy or cost savings and the methodology. Oh, but we have to get approval from finance and whether or not they, quote, accept our savings methodology, right? Mm-hmm. Well, that's not going to happen if they're a part of building that from the very beginning. And if they are a voice in the construction of that methodology, it's not seen as like a hierarchy or an approval process, right? Same thing with the concepts we talked about with Treasury, is if they're at the table having these discussions, planning together, it's going to create a lot of efficiencies like Joe was talking about, but it's also going to improve your culture of change and advocacy within those groups, right? Mm-hmm. Because I think that's really, really important when you're making a lot of these really important decisions for the business as it relates to the technology, the processes. It's just being there together to make those decisions and then setting a cadence to regroup on these things on a regular basis so that these decisions are happening in that sort of collaborative forum more often. And also, just to complement what Joe was saying too, I find that those conversations, when they're happening during a transformation, you're basically enabling the other individuals in the transformation to be cheerleaders of it. If you say from the very beginning, we understand that we want to be doing things differently. We want to know from you, what should we be doing differently? How can we make your life easier? And, they recognize that the benefit of hearing that and you hearing them and then taking and putting it into action in the transformation. We heard you, here's what we're doing about it. And now you have them along for the ride instead of trying to follow up later and trying to get them on board.
Mm-hmm. Yeah, so you're making them part of the decision-making committee ultimately, so that they're helping to build what the transformation looks like, and so they're kind of they're bought into the results at that point. And so they then have an accountability really to drive forward and advocate for the implementation of what it is that you've designed with them.
Right. Yep. And then they can actually, help basically enable it within the rest of the organization, because these groups are seen as the core of this functionality. So when you're actually starting to go out to the business and work with the different business units, if they see you come with that unified front, they're going to be more likely to be on board with the change.
Now, is there any particular messaging that you've seen be successful, in going and engaging with Treasury, for example, and talking about the need to collaborate on transformation? What's worked in terms of getting them on board and even getting them to the table to talk about it?
I think in my experience, it is just posing it in that way that we want to hear from you. And oftentimes, I think when we get approached about a transformation anyway, we're hearing these pain points from the perspective of procurement saying, hey, the business doesn't want to work with us, or, we're the problem, they're the problem. If you come at it from that perspective that we've heard these pain points, these challenges, and the first thing we want to do is just sit down as a group and mediate these things and hear from you. I have not had the experience that anyone says, nope, I'm good, I don't want to do it. Right. They're all willing to at least get their voice put in. But where I have seen it gone wrong is a lot of times a transformation gets started and stopped. If that's happened historically, that's going to create some major roadblocks for you to say, well, we did this before and last time you didn't do anything. So if that's the situation, it's a bit more to overcome. But if it's your first time around, I think that it's all about how we come together and collaborate. But you have to be mindful that not everybody's always going to get their way, right? Yeah. So there's still running a business, and just because you want something to go a certain way in your perspective, I think it's important to caveat that in the messaging, that we're going to try to do what's best for the business while meeting everybody's needs.
So Kelly, I'm going to come over to you. Have we had any questions from today's listeners and viewers that you'd like to pose to our panel?
We have, actually, yes. And thank you to everybody that has submitted questions so far. Please do keep those coming in as we go through. One quick question for you first, Jen, that's sort of a follow-up to what you were just saying. You talk about AP and Treasury being respected as stakeholders, recognized as stakeholders in this process. But Joe mentioned earlier the importance of language and terminology. Is there any way around calling it a procurement transformation in order to make those other groups feel like they're playing an equal part in it?
That's an interesting question. I think you do have to kind of toe the line a little bit if you're talking about a broader organizational change, because that kind of implicates a lot of other groups and resources. So that's why we call it a procurement transformation, because we are looking at evolving procurement specifically and adapting there. But I think when we come in, we talk about strategic advisory to the business, and you can kind of look at it across that source to cash cycle. And I think ultimately it really comes down to the messaging around the transformation instead of just the title of it, right? It's about how you propose it to the business and explain it and really market it within the business.
Yeah,
and
I would
that
add
language
to
in
that.
that.
I'm sorry.
Oh, go ahead, Joe.
Just going to add that every company has their own unique culture and what they're willing to accept from a change perspective. And so, we've talked a lot about seeing it from both the buy side and the supply side today. So if you wanted to call it a supplier management transformation, right, or becoming, an operational improvement initiative, but if you wanted to call it, being the ideal customer or something like that. There's all sorts of ways to make that resonate more and say, okay, we understand what we're trying to do here. We're trying to improve our own financial position, but also at the same time, helping our suppliers. Those types of things tend to resonate.
Mm-hmm.
And Joe, maybe to stay with you, a question that has come in from Antonio. I think this is interesting. Have you had the opportunity to observe the differences between maybe where gaps exist and how strong alignment is in organizations where procurement is part of finance or reports to finance versus how those gaps in alignment are different when procurement does not report up through finance?
Yeah, I would say there's a little bit of nuance to that, but for the most part, I don't see major differences in the disconnect. When procurement reports into finance, I'm gonna use some broad statements here. It's just based on my experience. If the person that's in charge, if the CFO doesn't have a procurement background, the disconnects are still there. And so those challenges are still going to exist, where, hey, why are you calling that cost savings? That's not a cost savings. We didn't see any budgetary impact. And no, Treasury handles the payment terms. You handle the contract with the supplier and take that input. So yeah, I haven't seen, pre-transformation. I don't tend to see it being a little bit more mature, even when finance is leading it. But that's just my experience. I'm sure there's areas where it's a more refined and defined process.
Right. Thank you, Joe, and thank you, Antonio.
Thanks, Joe. So I want to talk a little bit about, okay, how do we address some of these gaps? I'm going to actually ask you, Jen, to talk a little bit about, we've talked about change and process change, and we've talked about technological change. To what extent should we be thinking about process versus technology when you're looking at trying to close the gaps between procurement, AP, and Treasury?
Oftentimes we always say that you really do need to think about the process before the technology. But ultimately, I think that both are pretty critical. As I was saying before, when I was referencing about building the requirements for the technology, if we want to really create the efficiencies in the process, we need to enable that through technology. But it's important first to align from a governance perspective. So it starts with the policy and the process and saying, what are the thresholds that we want to establish for a bidding event, for example, and what are those payment terms and what flexibility do we have? All of that really needs to be decided up front before you even go out and start looking for the technology, so that you're picking the right technology. And I also think, there's often a question about, do we go more modular? Do we go, more of an end-to-end solution? And I think it's going to change per organization based on your objectives and what you need from the technology. So there's not one clear answer one way or the other, but the big thing is at least trying to make the decision within the broader landscape of technology, so that you understand where you're trying to go and that it's not happening kind of piecemeal over several years. And that's where we really see a lot of the inefficiencies in technology buying. And then you're having to go backwards and adjust everything. So what I'm trying to say is that it's important to make your decisions about process and technology together in a way that's going to be efficient for the business and not in spite of it, so that you're not just trying to over integrate or go too modular one way or the other. So I think they're just really important to consider both at the same time, but focusing on what processes are best for the business first.
So as you're thinking about process, I'm thinking about the sourcing process, for example. We talked at the beginning around making decisions that are a little bit more holistic decisions, looking at weighted average cost of capital, for example, or looking at days payable outstanding, and looking at the payment terms and all those things that come with like Treasury conversations. Should Treasury or AP, and I guess it's more around Treasury, should they have a seat at the table when you're going through the sourcing approval process? So what I mean is, as you think about governance for a sourcing project, and you typically would have procurement on that, and then you would have the stakeholder on that, and you may have InfoSec or, what the risk components, depending on what you're buying. Should Treasury be part of that decision-making process?
So I think, and I can tell Joe has some thoughts on this as well, but I think I think yes, but it's case by case too. We have to, whenever we're building sort of that project team for a particular event, you don't have to bring everybody to the table every time. And that's the idea too of having that steering committee and that alignment up front, is that if we understand the needs of those different stakeholders within the decision-making process, we won't have to include them in every single decision. But when it comes to a major decision in a really big or strategic partnership, then they should be at the table, so that you don't have a lot of that back and forth afterwards to say, oh, we should have checked with Treasury, or wait, hold on, let me go call Treasury or AP. So I'd say it's a little bit case by case, but it's kind of driven by how you're managing your suppliers at the end of the day.
Yeah, I would add to that. It's really, you need to establish those criteria up front. The answer is yes, they should be, but only for given certain criteria. So you mentioned, Phil, risk. And so if you look at a requirement and there's a high risk factor in some capacity tied to that, if you look at the spend or the anticipated spend or budgetary impact, and you see that it's over a certain threshold, those are the types of things that would drive, this is one where we need Treasury involved. And if you look at the outcome of a transformation where you start to do that, where you're going with it, one example is payment term optimization. So instead of having, a flat set, our standard is 60 days, get as close to that or beyond that as possible. It's saying, okay, for this supplier, which is in this industry, with this average day sales outstanding, and this level of importance to our business, we think that the payment term should be X. And to have some data and some dialogue around that, so that you're making an educated decision versus something that's more across the board and generic.
So does that then make it more of a rules-based approach as opposed to a project-based approach? You want to set the criteria based on lots of different variables to make the decision, as opposed to what should we do on this project?
That's what I would suggest. Yeah.
Sorry, Jen, did you have anything to add to that?
Nope. I would agree.
What I wanted to ask you, Joe, to kind of follow on from that is, we talk about process. Now, from a technology perspective, what can technology do to help you, as we talked about rules and implementing rules for thinking about these decisions, what is the role of technology? What should we be thinking? If an organization doesn't necessarily have a platform that helps them think about this from an end-to-end, from a source to cash perspective, what will technology help them do?
Well, the one thing, the top thing on the list always is better visibility into data, right? So if you set up a technology, an end-to-end source-to-pay technology in particular, and you have inputs from procurement, from AP, from Treasury in doing that, you can now set up a system in a way that you can proactively manage cash flow, that you can, reset assumptions or standards in terms of how you pay or when you pay or by what method you pay in a very easy way. And you can start to have a much more, a quicker picture of what your future cash flow is going to look like. But the other elements, analytics is the number one reason why you want to digitize anything. But efficiency to me is a very close number two. Increase straight through processing. So think about, again, that procure to pay process. If you can click the requisition button and nothing else happens, that on your side, nothing else you have to do, all the way through to that supplier getting paid at some point for the good or service they provided, that's a home run. And the efficiency savings that you can generate for your organization, because you no longer have to touch that once that happens, because all the approvals, all the rules are built in, all the timelines are built in, and as long as there's not some sort of exception that kicks that transaction out of a process, everything matches up and you can pay the invoice. That's really where you want to go. Because it eliminates redundant activities and it creates efficiency, and it lets you focus on the things that are important as it relates to supplier management and cash flow and working capital, ultimately working capital improvement. But the other piece of that, I would say, which we've talked about a lot today, is increasing supplier satisfaction.
Yeah. So
too many times I've seen that suppliers aren't factored into a digital transformation of the source to pay process. And think about every connection point where a supplier has to receive a purchase order or send an invoice or get paid through a process. If you haven't factored them into that, then things are going to go wrong. And it's not always easy to put suppliers into a procure to pay digitized process. They don't always want to. They're not always set up to, especially depending on your configuration, what you had in mind. So thinking about the way you can increase supplier satisfaction, again, making it easier for them to do business. They can put all their forms in one place. They don't have to fill out multiple things. Like when you go to the doctor and you have to fill out what's wrong with you, and then you talk to an assistant and tell them the same thing, and then the doctor comes in and tells you the same, tell them the same thing. You know, to avoid that type of process and to make it much more straight through on both sides can create all sorts of benefits. You know, and the output of that, I like to talk about where does that lead a company, right? So pre-transformation, you look at it, send me an AP file, show me your spend by supplier. And what do you see? You see the same supplier listed 5 different ways, 5 different names, you know, AT&T, ATT. Yeah. That's an example of a bad procurement process and a bad AP process coming together. But you also would see multiple prices for the same commodity, multiple payment terms for the same suppliers, all those types of things. And when you streamline through a good digital transformation that has both the buy side and the supply side as in mind, source to cash, you can fix those problems and you can have, you know, it's funny. I was talking to our head of sales about this yesterday, Brent Kinman, and he said to me, the terms you negotiate with suppliers can have a profound impact on the cash position of a company. And getting procurement, AP, Treasury aligned on what those terms are and how to approve them when they're non-standard. So, right, what are those rules that say we're going to go outside our normal standard and why? Can have an economic value add for procurement that goes so far beyond traditional savings. We're talking about cash flow, talking about weighted average cost of capital and ultimately working capital optimization. And a good digital transformation process can give you visibility into those things and to create a strategic advantage from them.
Now, my last question, I'm going to come to Kelly to see if we have any more questions that came in from everybody who's watching us today. And if you have any last questions, please do pop them in that Q&A box. So you talked about all the different benefits that aligning procurement, AP, and Treasury can bring for an organization, and the benefits of one from a process perspective, but also from a technology perspective. When you have people who you see, whether they're prospects or whether they're clients, or you just kind of see from anecdotal evidence of the folks you talk to in the industry, what are they basing their ROI model on for looking at technology to help them bring together the whole source to cash continuum? Are they just looking at traditionally cost savings, or are they taking, you know, the benefits that will accrue for AP and the benefits that accrue for Treasury, and therefore organizationally and taking all that into account?
Jen, you want to take that?
Sure. Sorry, it froze up for a second. Apologies. I think it really depends on the particular target business outcomes that each organization has when they're selecting the technology and when they're implementing it. So this is actually something that we focus on a lot within our implementations, is helping to establish those outcomes and then correlate the success metrics that will drive that ROI. And what we found is there's a lot of common themes depending on the type of technology that they're putting in place, but ultimately it's very different based on the change in the organization itself. So you're going to be looking at things like creating efficiencies through improved cycle times, elevating the role of the function. And that's not just procurement. What we're seeing a lot more of is accounts payable wanting a more strategic position, whereas they're, like procurement, oftentimes seen as strictly transactional. But if you create that efficiency and you automate their processes, they can add a lot more value to the business by playing a more strategic role. So it's other things like reducing, looking at just very easy metrics of, automating the invoices, things like that. So again, it's very dependent on the type of technology, but you define what does success mean to you and why did you buy this technology, and then helping to enable that through the tracking of those metrics and outcomes. And it's been a really great experience for us to share that with the customers and collaborate within their processes, to show them, like, hey, you said you wanted to do this, we've done this, and we're going to help carry you through your entire life cycle with this technology to continue to see you evolve and to find new outcomes and advance within your processes by creating more efficiencies.
Being involved in that entire life cycle is so important, because oftentimes I see so many transformations that don't necessarily accrue the benefits that were set out in the initial business case, because the technology is implemented and then it's kind of left alone, and nobody, whether that's on the side of the implementer or on the side of the buyer, is really looking and making sure that the initial business case was actually properly implemented, and then that you were taking advantage of all the opportunities that came along the way.
I'd say that even still, we're still seeing a lot of people buy technology and implement it and expect it just to magically work without the right change management in place, without making sure they're doing all the due diligence during the implementation to ensure compliance and adoption as quickly as possible, and then managing that throughout the life cycle.
Yeah, I would add too, I can't tell you how many transformations I've seen where by the end, the stakeholders forget what the initial business case was, and to plug Corcentric for a minute, I think that's what makes us much different. And that's the work that Jen's team does, is not just aligning to what a customer's business outcomes were in the beginning, but helping them guide them to what those business outcomes should be. Because like you said, Phil, cost savings is always top of mind, but there's just so much more that comes out of a good digital or good procurement transformation that they may not even understand or realize because they've never done it before.
Yeah.
Then to make sure that the infrastructure is in place to manage to those metrics, those business outcome goals, post-implementation and go live, so that you can make sure all that investment was worth the while, and that you're continuously improving.
Well, I know we're coming to the top of the hour. I did say that I was going to go over to Kelly one more time, but I'm not sure that we're going to have time for the last couple of questions. I see them in front of me. They're around customer of choice. And the question was actually, when ranking important tactics, is paying on time or according to payment terms the most important to be a customer of choice? I could say from my perspective, you can't go anywhere else if you don't pay on time. Like, it's kind of table stakes, because it's hard to get trust for other things if you're not paying on time, because that's the most basic thing. As you're on the supplier side, you think that's the most basic thing that your provider can do for you, is make sure you follow through on that commitment. Go ahead, Joe.
Yeah, and it also, when you're negotiating a contract or negotiating a price, there's an assumption a supplier builds in about when they're going to get paid, and they'll discount or get creative around pricing based on what that assumption is. So again, I know it's never usually intentional, but to break that agreement is in some essence being disingenuous about the negotiation, and it's something that it's just not a precedent you want to set. And you see it time and time again around companies who lag behind or who have supply issues. They're going to be the ones who create a harder way of doing business for their suppliers. And the easiest thing you can do is to pay a supplier on time. Not make it difficult for them to get that payment, right?
Sorry, I was jumping over you there, Joe, at the end, but I know it's the top of the hour. I want to thank you, and I want to thank you as well, Jen, so much for joining us and talking about the opportunities that really exist for bringing together AP, Procurement, and Treasury, and really to look at each other, I think, collectively as solving a common problem and a single problem that goes across all organizations versus working in silos. I want to thank everybody as well for joining us today on this AOP Live, and please keep a lookout at artofprocurement.com for upcoming sessions. But with that, I will say thank you, and we'll talk to you all again soon. I want to thank you for listening into today's episode of The Art of Procurement. To go deeper, including access to transcripts and actionable outtakes from the podcast, join the free level of our AOP Mastermind community. To learn more, go to artofprocurement.com/mastermind. And to find our entire back catalogue of almost 400 episodes, go to artofprocurement.com/podcast.